Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Here we are on the 12th of August, 2025. Welcome, everyone. I hope you are having an awesome start to your day. Well, let's have a look at what we got here. We're in this long off the 8:30, the news release. The setup was just above here. Let's see this. You have the little premium inside this little consolidation. Then we have a pop-up above it. And then we have a run back down. As soon as you see this fair value gap form and it was holding, I'd like to see that. We're all reaching for this. I was looking for this mean threshold of this candle here. So I got along here to the mean threshold. I think it's about here. I got out and then waited for the midnight candle to get taken, and then went long just after the midnight candle was taken. Now we're moving to a risk-free. I'm just behind the levels I had marked out here. And I put them on the channel there for you guys to see. So these are the immediate rebalance on the higher, immediate rebalance high of the 4-hour, and it's a 4-hour rejection block, I should say. And then we got the 1-hour rejection block, and then you go consequent approaching of the hourly wick, and then the buy side liquidity, the high, the new high. So we're risk-free. We'll see where it goes from there. So I want to see these levels start to provide some support. And then we're looking for the new high back here. Or at least the check 24 1-hour rejection block. If I can make it to that, I'll take off. Start scaling out a portion. And we've got a fair value gap forming in here. Just keep your eye on those ones once you've hit these levels. If we get denied, my stop loss is going to sit right in here. I don't want to see this guy get taken on the downside. That mean threshold. Scale one out of there. Trade below it. No. Let's see if it just comes back, taps this here and here, and it comes lower. And we're denied our, just shy of our rejection block. Got 3 more upside objectives to reach for yet. Good morning, Hadi. we're going to pull back inside this range. That 50% should put us somewhere in this consequent encroachment of the BISI, but we see the turn's already been made here. So looking for this 50% and see if this takes out this next candle here and uses it as support to go lower, or whether or not we come down, tap 50% and then start to run back up. If we get back through this level, you can get back in sync with it going higher. Good morning, Ali. Let's have a look at some of these other ones. I got up this morning, went outside to my backyard, and I could smell skunk. And there's a big hole dug out underneath our shed in the back there. I'm like, oh man, I really hope they're not in there. One might assume. See how this one did not take that low? And in NQ, it did take that low. We did not take that low. And back to that now inversion. We're inside that one. We did trade below it, but we did not take up that candle. Let's see if that keeps pushing higher. $775, $776. Yeah, this coming back and tapping the 15-minute. You right, Eddie? This is just coming back to tap this 15-minute inversion again. So we can get back down to there. Consequent encroachment, like 772 or 770 or 764 to 775. And see if we get what kind of reaction we get. That would be there. Yeah, so inside this 50% will put you right on that 15-minute inversion. Did we come back and tap it? No, we didn't. Good morning, Craig. All right. ES is working its way through that inversion again. NQ is kind of stalling a bit. It's already popped through. Got into the mean threshold of this last up close candle. That one's stalling. It's right on a macro. So I'd like to see that come down lower right now. I'm just looking for a recap of that 15-minute that Teddy just mentioned. Yes, the same thing. And the bottom of that, you in the bottom of it, put you 50% there. Right. See how it's finding support there? Dow Jones, it's got lots of liquidity above it there. There's a little plateau, so we could see this come back and revisit this old high. Even dig down into this 44,229 level. That'll put you pretty much near. Look at that, stalls out now at 15 minutes, and then you see that will put you right back in this level here, 50% if that holds. Leave that there. Oil, 4 hours just chopping up. I would like to see if we can get back into this level. We got it there. That's been worked very efficiently. There are the new day opening gaps. So we can get back into using these as support to go lower. If that closes below there in the 4 hours, opens come back into this range and then go lower. Look for these lows to get taken. First one, second one, just those would be the targeted objectives after we can get back into this level right here. 1, 2, there's multiple levels inside this BISI here. It's a 4 hour, 1 hour. Yeah, this consequent encroachment of this 4 hour BISI would be the retest of this old low, and you want to push through you want to push through 63.27. For oil, I'd like to see it retrace back into here first. Look for lower time frame continuation on the downside, and look for their low here. And then leave a piece on, see how far it runs. Got lots of liquidity above you here too. So if you do a liquidity run and look for a reversal, then you'd be looking for a run above these highs, or at least a run up into 64 to 64.08. Is it going to keep going? Nope. Gas pre-market's 1274. Well, that's right close to our tap at the top of our level here. See what we're looking for back here. It's a little imbalance. That's the level I'm looking for. Morning, Russell. Morning, Hans. Yes, many equal highs on crude waiting for me. It's got the downside to reach for first, I think, before reaching higher. There's lots of liquidity down here as well. I'm looking for that little level right there. I'm into the consequent encroachment here and this one. Those are the two levels I'm looking for. And if we get back through this level and the mean threshold, then I'd say we're going for those highs, or at least for the wick, 50% of that wick. Stuff. This is not even on the hourly basis. That's small little consolidation. You got to be careful in there. We have an upside of 135.34 for British pound. We're banging around inside the sticks we put out there a few days ago. We'll just keep banging around inside those. Euro, we're still banging off at that level we put out there a few days ago. Japanese yen. What's our friend the yen doing? The DAX, this was a pop up above the high. That mean threshold we're looking for, broke above it, get along there. Pay yourself, reverse, come back, take you out. You get a small little run inside this range here. Then it broke this level again on the downside. Then you look for immediate rebalance, which is right here. Trade through it, come back into it, go lower, aim for rejection block. You hit it there. And now we're looking at this level here, whether or not we get above that for a premium. Or if we just kind of hang around in here for a little bit. Typically, you'd want to see it just come back, tap that, roll over and go. That's a big dig into this premium here. If you take that high, see how that's almost that complete price leg from there to there is from there to there. and you're right back into equilibrium. And you want to see if that comes lower now. Or then we just pull back inside this range here for now. I got a couple of gold runs in here last night. This one came back, took me out. Oh, my stop loss was sitting here. I wanted to see that come lower into here. And it didn't. It came back enough to take me out. So I moved to the sidelines. But I got a couple of nice little runs there. And gold, it's in this little consolidation. I still like to see this downside objective here get hit. I guess inside that range there, you still have this upside piece here. As high as that. And this was run back to equilibrium. Then a change in direction. Take out a more low, get short to the discount portion, which is this little guy here. Cut out there. Look to go low here overnight, and then it came back to my stop loss. And I woke up. To see this level down here get hit. Banks kind of pulling back into our premium level there. The little piggies are on the run again, which is good. We're looking for these guys to get way up there. Remember this one, we were looking for this big leg here. Stalled. Next big leg up higher. And we're looking for like way up here. That's where my line is, terminus at 112.350. We'll see how many days it takes for us to get that. We're looking for this 15th of July. So when I did this retracement, there was an area we didn't want to see it get through yet. It was at this mean threshold here. It worked its way back down to this little discount level here. And then to the reversal. So we're looking for that high way up here at 112.35 for biggies. Disney just stalled in a discount 3 box. Looking for the 4 and then that daily inversion. Wait for this to get back down there. And little piggies already. Don't need 2 of those. Euro stalled in its reversal here. Just came back up into the breaker. It's in a neutral place. I wouldn't touch that right now. Okay. So we do have the continuation down. Also, those of you who kept thinking it's going to go higher, again, there's the reversal. You're inside this range here now. You're through that 50% that we were looking for. Banged on that for a little bit, came back up, tapped the lows, continued coming lower. Yes, equal highs. Crude waiting for me. That's long setup. MBT. Is that a different micro Bitcoin. So Bitcoin. Yeah, looking for, get this off of here. No. Yeah. I'd say that's a long. Right off that level there. I want to see this fair value gap stay open as a breakaway. It loses its luster as it starts to fill that in for me. So I want to see these, the worst, these old highs, old price, and they keep going higher. Ideally, institutional order flow entry drill right off this little breaker right here. Takes out these lows. And then we're right up to this breaker, this little fair value gap to fill. So we'll see where that goes in there, but looking for that order block there. So the low's been tapped. Yeah, looking up into this little area right here. And then if you can get through the mean threshold on top of this, then look for the higher level again. We're through that level. So this is the run into 9:30, 10 o'clock. Retest these lows. That'll throw all the people off for sure running for that old high there. As soon as you see that reversal, you got to be prepared for it. Did ES make a new run higher? Didn't. See how it stayed inside it as well. It hung around in there for a while. This was like, nope, I'm staying on the bottom half of it. And ES was like, I'm going to play inside there and then roll over and finally come down. Take out this low with the body, came back, found support, go lower. $15-minute chart. So again, if you see it, if you're gunning for this 15-minute area where we're looking for a return back into, you wait. Once you see that, you wait for the lower time frame, your 1 minute 15-second chart, to see the reversal to catch it long, and make sure that you don't see a new reversal that just swings on you and comes back. But you always got to look for, if it's hitting this level, does it hold and keep going higher at the expected spot? You can't just come naturally assume that it's going to stop there. That's where we want to see it stop. But if you don't see a reversal pattern happening, then it's going to travel. You wait for the reversal. So you say, okay, that one wasn't hit. This one wasn't hit. This one wasn't hit. What about this one here, or here, or here? And you just keep waiting for that reversal to happen. If it doesn't, you're in the discount. You're in for a run back into that range deeper still. So you pull your fib on that tool, that range there, and say, where am I sitting inside this whole range? What would be the logical place for it to run to next if my objectives on the other side haven't been or they've been run through? You're looking for 715. $715.75. That's yesterday's new day opening gap. Or sorry, new day, the first presentation. want to see if this little level right there holds. And reverses and keeps coming lower. If we can get back up on top of that, I'm wondering if we get back inside here, but otherwise I don't have a clean reversal, so if that continues to come down low, that's what I'm looking at there. Equal highs 64.30 first. Craig's going for oil again. Well, you're right in the mean threshold of the breaker that takes out this little high. That high. Some people might call it a mitigation block because it doesn't take it out that high. If you're discounting these, that's a nice little Cam 2 model for a run inside this range. It came back to here. Sorry, Cam 1. Cam 1, run back up to the premium level. And you wait for it to get through there. It does. And then you wait for it to stay there and it just popped on the low of it. Ran higher to the rejection block. Pay yourself at rejection blocks. The reversal occurs. Trade below it. Trade back into it. Come lower. Inside this small range. Mean threshold. Last down closed candle. Take that. You want to see that continue going lower. Upside objective would be here. It hit it. And rejection block would have taken your stop there. If you're putting that, following the rules to the letter there, then that's where you would have been taken out with that candle. Oh no, maybe not. Maybe not. If you would have followed the rules and you would have said, I'm in here, traded off that, and you went lower to the mean threshold, pay yourself a mean threshold, move to a break even, then it would have come back. So no, you wouldn't have followed the rules. Like as soon as you see that move to break even, especially when you're having a consolidation like that in the discount portion. So now you see the trade below. I want to see it tap the old low here and keep coming lower. And it just did there. Just tap that old low, just shy of that consequent encroachment I wanted to see, but just shy of it. Tap the old low, rejecting off of that, looking for another run down into this line here. And if we can pop through that line and get into this last down close candle's mean threshold, and we take that, then look for a run on the liquidity below. Now this last down close candle's wick. %, right on it there. See that? So you get 50% of that wick. We have immediate rebalance here. So that treats it as a fair value gap. We've now traded above it. We've tapped back into it multiple times. And you're into that rejection block or wick. Now I want to see if that lifts off from here. If it doesn't, we've got a nasty little price leg coming our way. If we take this low out here, then the next price leg lower would be what would be a logical place here. That would fill the fair value gap here. If we just run up to there, and we're already above that, consequent encroachment would be the top open of this little breaker here. And there would be, wouldn't be that high. So I would expect consequent encroachment. Now, it would be interesting to see if this midnight candle, we traded through it, tapped it, went lower. And there would be the high. So if we roll, come back up into this, the first fair value gap after midnight, tap that, and this next price lick continues, we're looking for a retap of this little propulsion block here. Yeah, I consider that more of a propulsion candle. So anyway, we'll see what happens there. Russell, no stop loss. What was that comment for? Did I miss something there? What's your target on the crude? No stops. No stops. This Craig. Okay. Purge previous day's highs. I'd like to attack on the lows. If you chase this higher, you got a market slap. It's exactly that. But you saw the reverse. You saw the reverse happening. You got to trust these things, you guys. You got to trust them. If you get that greed and you say for sure it's going there, and you see the reversal after taking out a high, you see that, you got to have your stop loss tight. Or do whatever you like, but there's your example of a reversal. It's what we look for every morning. Every morning we look for the same thing. So that's a nice little screen capture and psychological test here, or notes to put in here for your trade notes for the day. I was absolutely certain it was going higher. I ignored the reversal. My mind was still focused on marrying the highest objective. So unless you've got a stop loss sitting way down here and you don't care, you let it sit and you expect this to bend and head back up again, then great. But you need to write in your psychology of the day. What was I thinking? Why did I not recognize it? Why did I not see the reverse? And I trail my stop loss accordingly, or get out when I could. And then write down. That's an important part of your study. It is not just about reading charts. It's about reading yourself as well. Anyway, hello, Rom. Good morning. Rom, you were talking about yesterday about getting, anybody have any trade notes, the rules? Just kind of listen up and you'll hear the rules as they mentioned in the specific setups. So when you see reversals, for example, you can write reversal rules, range extension rules, internal range liquidity rules, take profit 1, 2, 3, and 4 rules once you're in an internal range liquidity hunt. All that kind of stuff. I like the lows at 640, high, get below 718. For lower prices, keep an eye on the premium discount. I like this level right here, this Monday's first presentation for value gap. Is there kind of reaction we get off that? Whether it's just a wick into here or whether we get a body below this level. Would like to see first hold and send it higher. We're back inside Marky Mark's 3 o'clock, 3 hour candle from the other day. I think this was the the block we're looking for price to run into. For now, we'll just call it area of interest in that box. Look at the hourly chart. There's the hourly chart. Yeah, we're through that premium portion of it already, Hadi. And you got this overlapping one and this overlapping one. You see that? There and there. And then you've got this one here. So you got overlaps. So this either has to speed through this consolidation. It has to rip through that and get to the other side of this. Find some support at that and come lower. And then we're aiming for 652. 652. Obviously 676 first, then 652. A fill of that busy. So now this is high resistance. I wouldn't expect that to run back up there just yet. So now you've got that. So I want to see at least get down into 711, 709. That puts me down into here with 6. Oh yeah, that's way through there. If this leg continues, those levels there, Hadi, you're just looking to see if you're getting any support at those 1 hour levels. And if those 1 hour levels, will look for that reversal at specific levels. So if you're marking off that low, you're already through it. If you're marking off this high and then the consequent encroachment and then the low, if you're marking those and you're marking this and the consequent encroachment and the low, are you getting any type of response from that? Are you taking the whole consolidation and looking at 50% for sensitivity? There's no but a whole body above there. It's just wicks up there, right? So it's not a strong cam model for me. If you're looking as a cam 2 to go higher, you had a wick run on that, and now you've got high resistance. So you see this consolidation. I'd have to see a reverse off of here, get right back up into the top of it, like that nice displacement candle with a fair value gap would be. Oh, okay, it looks like we've got a little switch up here, that kind of thing, right? Otherwise, still downside, still looking for more of this busy to fill in. If you're looking at a cam model, all the way down to 676 or 677, and then leave, right? So there's just way too many scenarios to play with here. That's the important thing to keep in mind right now. Hey there, this is equation on spot trading. Oh. This is liquidation on spot trading. Sorry, I don't quite understand you, Nonillion. There's a liquidation on spot trading. Sorry, I don't get your question there. You'll have to rephrase your question, then, Nonillion. And welcome. I've never seen you before, so welcome to the channel. Kamal, good morning. Listen for those rules too. Listening for those rules. How many days back do you keep your market, your marking of the 6 a.m. candle midnight? Oh, just for the week. Just for the week. So I haven't marked them. Bad me. I have not marked them this morning. So let's go back and mark them. So start your day off with Wow, this one's really small. The low to the high. And then you're going to find the, that's the midnight. Make a template that has midnight open range extension. That's why I call it more. Take your midnight open, which is over here, so right there. And then you look for your first fair value gap, which is over here, very small. And you mark that as Tuesday, where you remember which one it's on. That's how I put it anyway. Just it's a Tuesday one. So when I'm looking back at these levels, I'm saying, well, that was Monday's midnight open range. It was Monday's first sensitive area. And you see how that becomes a sensitive level. Come back and tap it. And then we can also find our other levels inside here as well, right? Like a 15-second chart, you're bound to find some little civvy that's been taken and retested. Then you find your, we used to do the 4 a.m. candle. But really done a lot of, and if you're doing Marky Mark's 3-hour candle, take that whole 3-hour candle and mark it out. And then I'm doing the 6 a.m. candle. Just the 6 a.m. single candle. 1 minute candle. And that is Abs. That's my buddy Abs. He's come up with the 6 a.m. candle, listening to Michael's Twitter feed one day. He talked about it in passing. It was a very brief discussion he had on that. And he talked about the 6 a.m. candle, and that was it. Didn't really talk about it. And then, as usual, Abs dove down the rabbit hole and stayed there for months on end, and then brought it to our attention, and nobody was paying much attention to him until we've added it now. It's like a standard, for me, it's a standard level to look for. And then Hadi's 830, which is another Michael discussion, that Hadi went down the rabbit hole and came up with Hadi's open range concept, or his open, his open trade from 830. So if you take the 830 entry here, 830, right there, we call that ID's 830. Oh, it's lining up right with the box that we're calling down there, hey? So anyway, there's we see it's a bull candle, so that's a huge bull candle on your first how do you play that one, Hadi? So that one's saying to me, look, hey man, I want to go higher. Didn't even give you an opportunity, just went straight higher. Typically you look for Hadi's entry, I think, is one of these. You see, sweep the lows, then take out the highs, come back to it, and then go higher. I mean, you're looking at that as a good thing. And Hadi has his own set of rules around that, and he shared it multiple times on our channel. So check that out. There's the 6 a.m. tap. Right back up to that little area we're looking for, which will give you a perfect entry low there. So we're looking for the top of this box now. Remind me, Rom and who else was it? Kamal, and I'll explain the rules as I see them. If I get it wrong, the owners of their little setups will let me know on the side there. I would appreciate that, because I want to respect their their setup. It's not my setup. My setup's like the box to box. And I'm using some of Michael's 2022 models that are like solid trade setups. I have rules around reversals and I have rules around failsafe. Failsafe is not a Michael thing either. It's just something I use. Just make sure you're really tight with price action. Come on down. All-time high NQ was made under London 3 a.m. Maybe we will visit the regular trading hours today. Oh, wouldn't that be awesome? Ponds all the way down to 629. There's the retap of the low. Let's see this keep coming lower now. This could run all the way back up into 726, all the way up to 7, Hadid's 830. Right there. Roll over and come back down. Through the mean threshold already. This is when the wicks aren't giving you the precision. I'm looking for, oh, bite your tongue, dear. We have an immediate rebalance right here. We talked about this, said this, we treat this like a fair value gap. Look at that right there. Look where it hit. Right there on the little dot. And that's a Tibbs 32. 3032. If we get through that on a 34, we've got the Crazy Ivan going on right now, bottom of the hour. The look back. If he sees you and takes you, looking for a run back into that range. Don't forget we've got some play all the way up to here to get our next price leg down to here. Ooh, my voice just suddenly went deeper there. Did you hear that? I hear puberty finally. Yay. So we're through that level now. Crazy Ivan. Now we're looking for a run higher. He's coming for you. Thank you, Darren. You're welcome. Ask D's wife about the house rules. She is one of the most easy people to get along with. My wife, she is amazing. She can tolerate all my craps, and she just smiles. It's like my cousin. My cousin's like one of these. Lorraine, she's like one of these. She's always singing. She gets up in the morning. She's singing. She's dancing around the house. Drives her husband nuts, but she is always in a positive mood. Always, always, always in a positive mood. That's Carla. You can tell those teachers who haven't been burned out too badly yet. We're still happy to be alive and love watching kids learn. And anyway, yeah, so what do we got up here? So you have to abandon the idea of this down here, right? So we're all looking for this to go here. And if you're going, haha, he was wrong, so what? You gotta watch and say, well, okay, if it breaks this high, it's Crazy Ivan time. We're expecting a look back, and there's a look back, and it took the high, and then we said it's gonna go higher because that's when he comes looking for you. If on that first 30, 32 to 38, if he comes back and breaks that high, he's coming back looking for you. He's found you and he's zeroing in on you. So you have a nice little run all the way back here. So this may be the pump higher. If you take this leg here, and you know me, I'm always drawing these price legs that sometimes I get them, sometimes I don't. It's like SMT. Don't 100% count on it, but if you did 872, that'll take out the upside liquidity if that next price leg continues to go higher. So for me, I have to see it break right there. If it breaks that, then you got last little piece going higher. If not, we're back inside this consolidations, 50%. That's a CAM 2 model. Right to there, and if I go equilibrium, there's 50% right there. That's a CAM 2. If we get below that level right there, then we're looking for another big run back here, which means that if this price leg from here to here, and that one holds, we're still back to the top of this box. Our box is not dead yet in the water. This was just our CAM 2 entry. Your stop loss would be sitting, if you're looking at those CAM model people who've been studying my CAM model, not really mine. Mine is the 3, but the CAM model 1 and 2, which is Michael's consolidation, high and mean threshold. Those were his ideas for the CAM model. I just call them CAM because Michael never named them that I know of. So I just call it a consolidation attack model 1 and 2. So 1 would be here to the from the wick to the body. 2 would be the mean threshold of the high to the low of the consolidation. And then if that trades through there on a close, take your stop loss off. Close your trade out because it's going higher. And the fact that we're revisiting that right now, don't like that idea at all. You want to see that tap that and go lower, not this coming back and revisiting thing. So if it closes above that, close your trade out. That's the fail safe for me. So it's just tapping on it. Surge through, take these highs, use this as support now to go higher. So you want to see it pop up above here through this and then take that premium array. Still no body above that. That's just the basic rule of a consolidation attack. And if it's coming back in here, I wouldn't even, I closed it out right there. I don't trust that. The multiple times it's tapping it. You made stop, I go, I don't care. I've got my stop loss is sitting right there. It's a small stop. And from a business plan, that doesn't look like a solid entry. A little gem is the 8:30 news candles should be left on the charts, just like first presentation. They're high probability targets for the future. Where's my long setup? Hit target on Bitcoin out of the trade, 50% of the range. Conservative. Oh, did we get our Bitcoin trade? Oh, okay, so we're up on that. Let me move my stop loss to. Oh, I didn't take it out there, did I? Okay, let's close it out. I didn't take it. We're calling for that, didn't we? That upside objective there, here. But I didn't put my stop loss there. So I lost that profit. It's $600, so whatever. Hit our objective. So good for you, Russell. I'm glad you were listening. You took the exit on that. Good for you. D, where is your top box for your box-to-box strategy? Right here. See this one? You look at the range that you're in wrong, and say, where's the premium box? So there's a bunch of things you have to look for. So this is a cam model. 1, 2, and a 3 would be this guy here. It's 50% of this. Okay, so if you're looking for a reversal, you look for the first discount, which is this immediate rebalance. And if you're not good at reading immediate rebalances, just look for the first SIBI that occurs after taking an old low. So the rule is wait for a low to get taken, wait for a SIBI to form. If it trades through the SIBI and back down into it, that's your entrance. Your exit is to look back in the range that you're in, and don't overshoot your ranges. Just look at the range you're in and say, where is my SIBI or my BISI, for example, right here. Where's my BISI? If I'm entering here off, let's say this one, let's say this candle went above and then came back with a wick into this level. That would be your, after taking out a low, that's you take your entrance for a long, and you're looking back in this range. First of all, you look for, the rule is look for to the left, and the very first candle you see, which is bullish to the left, is the potential bear trap. There's lots of little things you have to learn along the way, but just I'll give it to you as simple as I can for box to box. You go, I see this SIBI, and I'm aiming for that next BISI inside this range, which is right here. So let's say you got above here. I'm sorry, there's a little commercial running. So if you see this entrance back on this candle, right there. So if it returned this, let's say this wick, this one's traded above it, this wick comes back down, taps it, that's your entrance long. Stop loss will be sitting below the low. You have to, sorry, you have to include this imbalance down here as well. You have to include the imbalance. So you tap this and you look for this BISI on this side right here. That's box to box trading. It comes up, it hits it. Pay yourself 1, 2, 3. There's 3 different places in there you can pay. It's entirely up to you. You decide where you're going to take your trade. Now, if it trades through it on a close, we're expecting the range to extend, to go higher. And if the candle rips through the high as well, then you use the high and then the wick to go higher. So that trades through the high, it comes back into the wick, and then continues going higher. That's range extension. That's typically what I look for in range extension. And then when it reverses, like in this case right here, you say, we've taken a high, there's our reverse, there's our premium. So we'll just do this in the reverse direction so you get an idea of what it is there. Roll. So you see that there's a change in direction right here. When we trade back into it, look, that's perfect. You trade back into it. Now we're looking for a SIBI inside this range. Where is it? Right here. Okay, right here. And you go, that's the little area I want to aim for. So you see, enter here, exit 1, 2, 3. There's 3 different places you can exit. So as soon as it trades below it, you go, great, I'm looking for range extension. If it trades back to it, which it doesn't do it here, it just keeps going, then there's another set of rules on how to attack this candle here below. I'm just giving you the straight BISI sitting right now. There to there, done. Trades below it. Now you're going from here, you're looking for range extension, and the next SIBI below us, which is right here and right here. Right? So as soon as that range gets extended, we look for return back, or you get this next BISI. Then watch it. See, it came all the way back into that SIBI again. And now you want to see that hold there, or if it trades above it, then I'm going to go long. But it doesn't. It came back, taps it. Good. That's a short, and you're aiming for the next SIBI, which is down here. You tap it, you get to the rejection block, and then it does not give you your lows. So that's when people get, oh, it's going for the lows for sure. No, pay yourself at rejection blocks. You've heard me say it a million times. You pay yourself. Then you wait for the next reversal right here. You don't get it here. it gets through this level. So you're looking for this level next. Does it get through it? Yes, it does. Does it tap it? Yes, it does perfectly. Aim for your BISI. You hit it, trade through it. Good. Now we're looking for that range extension, and they go higher. So all of this just inside here, just using those rules. If you follow those rules and your stop loss is tight, you know where the fail points are. If they fail, in other words, if that fails, my fail safe is if it trades a body through that level on a close, I'm on the wrong side of it. It's not going short, it's going long. If it doesn't, it just wicks up there. And you have to be waiting for that candle to end to confirm it. Now, if it rips all the way through, it's going to come right for your stop loss. And that's cost of doing business, man. It happens. Right up inside that BISI again. And we've ripped all the way back down here. So forget the box idea just now, because that's not a price lay at all. I hope you got that roll. Go back to the video, note the time, 66 minutes in, and look at that last 6 minutes I explained. So from an hour on, have a look at that box-to-box trading and write those rules down. So we get trade back up into that BISI. So there's 50%. That's a cam 3. Back into a breaker. Right on the breaker. Now a reverse. I want to see this get blown right through this mean threshold right now. Start heading back to our box down here. There's the 6 a.m. candle again. That was a perfect explanation with examples. Thank you, D. Always pay yourself at opposing boxes. Noted. Yes. Always pay yourself at opposing boxes. You got it, man. I remember an opposing box is a SIBI to a BISI, not a SIBI to a SIBI. A SIBI to a BISI. Even though, yes, you can pay yourself at SIBIs, but the strategy is to use these as inversions and support to it, range extension. If you don't close above them, like a lot of people saw this running up here, said, now it's going for the highs, right? No, it's not going for the highs until we break this to the upside and we get range extension. And then the next objective is this one, and then this one, then this one. Because if we don't, we just tap those and they roll over and come back down again, like it's done here. People are overshooting their PD arrays and you haven't got confirmation yet. That's why you must have confirmation. For me, just me. Got to have confirmation that it's going higher, because I hear too many people say, oh, it's doing this for sure. No, it's not. You don't know that. It's got way too many PD arrays to get through yet to confirm that. And if it does, and they go, oh, I told you it was. Well, that was lucky, because as you can see here, those who were saying that was going for the highs, it did not break that high. It reversed on you. Now it's coming back to the box again, right? So you've got to stay inside the PD arrays, because if you get greedy and start running outside your PD array range, then there's funny hitter box. Then you're not staying on the horse. You're just trying to jump on a horse as it runs by, and you think it's running to this, to the moon, and it's not. It reverses on you. Okay, so the fill is right there. That's done now. That whole BISI has been filled. Look at that. Immediate rebalance. If we come back and tap that, that's an immediate rebalance on a 1 hour chart. We're back into the consolidation CAM 1 model. You want to see a piece of that stay open if you want to be bullish. If it starts to get into CAM 2, you want to see a piece of that stay open, and if it fills it, then you start to lose your, and if it closes on that, inside that, then we're looking for a potential run on these lows again. So CAM model 1 is a nice little opportunity right there on a 1 hour chart. So if you're looking for a CAM 1 model, you say, okay, so how do I know that's not going to turn around? It'll just keep coming through here. Well, then you look, if that's your CAM 1, you go down to a 1 minute chart and you look for your reversal, because that's a key level you're looking for support. So you look for it 1 minute chart to see the reversal, and then you go, good, if I can get above these candles to that premium box, then I'm going north. I'm going inside this range, and I'm going to stay on my entry, or I'll look for my first entry, which is the first reversal I see after a low, which won't be until you get past here and through this. So it won't be till way up there. You won't even get a chance to hit it. You'd just be a bold, I'm going to take my CAM 1 and I'm just going to hope it goes. And I'm going to put my stop loss below 50% of that range. Because you're down here, or you get down to a 15-second chart. Let's look at a 15. Oops. Let's look at a 15-second chart here and see if we see a reversal. So there's your CIBI. We've traded above it. We're tapping on it now. Now you want to see that go higher. Your stop loss will sit here. So if that's your CAM model 1 entry, you want to see this hold, and this ends up becoming a bear trap, a bull trap. If we don't get above here, you're already inside this small little range here. So you have to enter in here, catch your 50%, 62%, and hope that it gets above here. If it gets above that level, now you're back inside this range, and we're going to go from CIBI to little immediate rebalance BISI up here. So looking for there, that's your realm, that's your internal range liquidity hunt. And we wait for body to trade above that, which it just did. It's tapping it now. Want to see that keep going higher. It can come all the way back inside this candle. You want to see this act like propulsion. You want to see that keep her going. I like that. Bounce, go, go, go. Now you do your, here's your next set of rules. Realm, write these down. Take profit model 1. Take profit model 1 is simply draw the range. So if that's your target, that's a take profit model 2, box to box. Take profit model 1 is an internal range liquidity hunt. So you're looking for this candle to provide support all the way to its mean threshold right there. And its mean threshold lines up with this candle and that candle. Okay. And you want to say as soon as it hits 50%, take half your trade off, move to break even, so it's a risk-free trade. So if it rolls back on you, go, oh, well, I was on the wrong side of this. This is another price leg lower, and at least I made a chunk of my money out, and I protected it right away. If it runs higher, then great. As soon as it gets to 62%, it's 62%. Move your stop loss to 50 and take a portion off here. 70, so on and so forth. That's a take profit model 1. And believe me, that will save your ass more times than not. There's the 50% of the order block. Hit 50% right there. Pay yourself. Right there. So you've just paid yourself. You move your stop loss to break even, and you pay yourself a portion there. Hit 62%. You pay yourself there. This is an internal range liquidity hunt based off that level. So we're looking for run. There's your CIBI, and we're running for the BISI up here. Are you listening to this roll? Or am I wasting my time here? Mark, 3 a.m. sell worked out. I still don't understand your 3 a.m. sell. I have it marked on my charts here, but I still don't understand it. 8:30, risk free, he's out. What are you doing for 8:30, Hadi? D, you should give this session a title, Rules Masterclass or something like that. I'm all ears here. Not wasting your time, Darren. No. Okay. So you go on the 15-second chart there. See that run back up? Pull your fib tool from there to there, and you'll see how that internal range liquidity, we wanted to see that busy get hit, right? This immediate rebalance, I wanted to see that get hit. It didn't. So you got 50, you got 62%, and that's it. It came back to your 50 and took you out. So you're on the wrong side of that trade. You still made money on the wrong side of the trade as it makes its next price leg lower. That's why that first take profit model one is great for beginners. It's great for people who are just doing a quick internal range liquidity hunt, because the majority of the time it will come back into 50% of the range, or just above 50%, or 62, or optimum trade entry 70%, and then continue coming lower. So this is a way to catch a perfect opportunity to get 85 all the way up to 62%, which is 85 to, that's 40 handles there, 41 handles, even being on the wrong side of it. You know what I'm saying? You catch the reversal, you jump on it, pay yourself there, or pay yourself at 50%, take half of it off, you're at break even plus the cost of your trade. And then as soon as you hit 62%, you take another 10% off, move to 50, and now you've made all that profit, and that reverses on you. And if it doesn't make it to 62, at least you got paid at 50 and it changed up on you, right? Where does it change up? There's a little stretch these things right out. You'll see them. There's little imbalances that sit right here. There's a change in direction right here. You traded right below it. That candle's high is 1725. This candle's close is 1717. Is that right? This candle's high 1725. This one is 1750. So it did not close below that low, that little swing point there. This one did. You wait for it to take out that low. It does. Continues to rip through. You don't get any opportunity on the 15-second chart to catch that. Market structure shift. Takes out the next busy. Takes out the next market structure shift. Comes back. Finally gives you no. And then continues going like, takes out the next busy. And then you finally get a market structure shift down here. Then you get a tap of it there. So you've got no opportunities. It just ripped right through all of that to come back through here. But that's where you first see it turn. Anyway, that's that small little range hunt on a 15-second chart. See that box we were looking for? We traded through it. We came back into it. Now we're looking lower. You're looking at Hades 830 if you want. Trade through the 830 to the 830 and keep coming lower. Now you got all these little sensitive levels down here that we've marked off before. Now you watch those. I don't know what they are anymore, but they're obviously sensitive levels that we've marked off. So you see how they become important levels. So we'll see how we get eaten through those. So we're heading for these lows here. Now that we went through 50% of that range, kept coming lower. So looking for these lows. So your CAM2, you didn't see the reversal for your CAM2 is in here, and you're using your, like we did on the 15-second chart, you see your reversal there, and now you catch that, pay yourself, and protect your stop loss. If it turns back against you, your CAM2 failed, but at least you made a small little chunk of change out of that before it failed. So you've got to combine these rules, obviously. Safeguards, you've got to safeguard your money. It's a business, it's not gambling. So you got to build in all these redundant systems to protect your money if you can. Whether it's fail-safe, whether it's take profit models, whether it's just personal discipline, whether it's higher time frame, I don't know, whatever you so choose to do. So we're back into 50% of this wick on the hourly. We've hit that, and these obviously a bunch of sensitive levels, and you see this SIBI right here. And you don't buy it until you see something pop up above it, come back down, and measure the range. Are you still below 50%? Is it a discount that you want to sell at a premium? If it's not, don't start buying it when it's up here, because that's already a premium, and you've lost the opportunity to get in on that for your premium inside this range. It's a small little internal range liquidity hunt. We have not, this is that debate we've talked about before about, do you buy that when you see it close right on that level? Tap it and go? I don't, but that may be your rule, and say as long as it closes on there or above there, I'm in. I'm going to go long for 50%. So looking for, that's entirely up to you. That's a rule you have to establish. But 50% will put you right back on there. That's an up close candle. So you got to be above that if you want to push higher. Watch right there. See how the bodies are not above there yet. So if you're one of those that like to open and close on it, now you're starting to trade below that level. You don't, it's below it now, you're coming lower. You don't want to see that. That's why I don't like the close. I like a body getting up there. Write this stuff down. Trading gold. Take screenshots. Take screenshots, listen, watch the video over again. I'm giving you some stellar stuff here if you use it. I bought and sold the decrude puke just now. I am listening. Ah, you bought and sold it. Right off there, sold, bought. Good for you. Right to that 50% of that wick, eh? We're talking about 50% of this candle. Look at that, right to it. Bang. Anyway. Back to our regularly scheduled program. See how this one's above now? Now I want to see a body get above this. That's an up close candle, I think. No, it's not. It's a down close candle. So you're just looking for 50% of this run. I'd like to see a wick come back into that level and give it a little tap. Right at that candle's open is fine by me. But it's not going to give it to you. You get your 50% there now. Now when we said this is going to go lower, it did, but not very low. Didn't take out the low, so switched it up on you. Still, sometimes you can't get in on it. There's 50%. And those other people go, yeah, I knew it. I got in on it. My stop loss is sitting here. That's good for me. I don't care when below. Again, your rules, not mine. So you pay yourself at 50, move to break even. So if you're in on that trade right there, you're just above it. That pays the cost of the trade. Plus you pay yourself half the trade. You're at risk free. So you'll see Hadi or I or some of the other guys put RF on our channel. You'll see RS is risk free. So you've now if you're right here and you're saying that's my stop loss now, I've paid myself half the trade there. Stop loss is in profit. Now I'm looking for the next chunk of profit, which will 10% will be out here. So you'll lose you'll be out of 60% of your trade by here, and we're looking for this right here. Not a great one because usually I like to say just stop flat on that and go. So there's 62%. Pay yourself there. Now move to 50%. So watch this. So we're just using this as a, oh, there's 70%. So we're going to be right here right now. Your stop loss will be sitting here and 70% of your trade is off. And you're waiting for that to hit 75. Come on. Right there. Now I'm at 70% of my trade. As soon as it gets to 85, if it comes back and taps you out, you're out. Wait for that 79% to get hit. So there's that premium level already. There's box to box. Done. So your box to box trade is over. But we're just using CAM model 1. We get now I'm at 75%. I want to see if we can get back up to that body at 88, or it'll come back, tap us out right. Oh, so close. If it gets to 88, I'll move to 80. Right there, there's 88. Now you want to see that go higher. Rejection block, pay yourself a rejection block. I'd sneak that sucker up right there. Get the rejection block. Come on, go. So this is just chasing internal range liquidity, right? You've paid yourself all the way up here. There, you're out. Done, dusted. So there's a run from, I wouldn't have been in that, but had you been one of those people that like to take that one and put stop down there and run 50, you would have made all that in profit. Again, not my rule, but that's the one we've been talking about before. And if I look at it now, this candle's low. I didn't look at it clear, I just kind of browsed it. So this candle's low is 64925. 64925. This candle's close is 65050. So we did close above that level. We trade back into it. You don't want to see it trade below it. So my rule is I would have been out there anyway. So if you look at that, I guess we can validate this. You'd have to take half the candle, half the wick, half the body, and then stop right on the body. I would have got out of that because I wouldn't have been analyzing that enough. I can easily analyze it after the fact that we validate that candle right there on that. Then it traded back low to 50% of the order block and then went higher and then traded all the way back up and we cashed out all the way up to there. And now if it reverses on you, comes all the way back down and through here again, you can see how that box to box trading pays you internal range liquidity hunts. They're beautiful. You develop your rules around this. You develop your rules around stop loss and fail safe. If you don't know my fail safe video, it's in the, just type in fail safe in the search bar and I'll give you a rundown. I spent a Sunday working on fail safe there for you guys. So check that video out. And anyway, I hope you enjoyed that so far and you got something out of it. If you're new to our channel, subscribe. We're here every day trying to help you out, get better understanding of your trades, price action, getting clean riding. This is much cleaner price action. than the crap we were dealing with yesterday. Remember how choppy that was? This is much cleaner. Much, much cleaner. So you want your 8:30 set up now, Hadi. I'm probably way behind in the conversation. Need to take the lower reversal. Loss taken. I'm going to have to go over this video. 8:30 setup is here. Took the low, close above 8:30 and ran. Buy side liquidity is the first target. Didn't work. All on a 1 minute chart. Did you get your buy side liquidity, or are you looking for the high of the day? I don't know. Sorry, Hadi, I missed your 8:30 setup. Sorry, bud. Rom, that was a nice live example of box to box. Watched it closely. Box to box is the best. I love it. Yeah. It is an awesome setup. And that take profit model 1, if you're just starting out, and even if you're a veteran trader, is a great opportunity, as you can see here, is a great opportunity to scale out your profits inside a small little range. Because if it reverses on you, you maxed out right there at 88%. We chased that all the way up. We watched it to make sure it didn't come back and take us out. And right there, you maxed out profits. Now, if it comes all the way back down again and you're on the wrong side and this does continue going lower, you maxed out profits inside here. That's a take profit model 1. It's a great thing to do. What you'll find that you'll have a problem with is remembering to pull that fib on that range that you're in. You'll tend to go for, I want to go for the box to box for sure, which is great because that's a take profit model 2 model. You just say, as soon as it enters there, my stop loss is there, I'm going for that and I'm leaving it and let it run. That's no different than that if that was a 1 month chart. No different. 50% of the month range. Imagine that for the whole year. You put your mega trade on, let that run. Go check on your 1 month. Oh, what the hell? Let's do it. Let's put it on a 1 month chart. I don't know if it'll do it on here, but with the 1 month doesn't go back far enough. Let's go to a 1 week chart so you get the idea. All right, so here, row, you see this right here? You see that imbalance? You trade above it right there, trade back into it right there. This candle's high and it's open. That's my line in the sand. I don't want to see it come back into this. My stop loss is just below 50% of that last down close candle. You trade above it, come back into it. Where are we aiming for? The next imbalance, like to like array, right? So like to like array. This is a weekly candle. So you catch this one. As soon as it trades back into it, you go long. And as soon as it takes that high, you move to break even. Pull your fib tool. Just doing this one here, box to box. There's 50%. We got in just below 50%. Gets to 50. Move your stop loss to break even. 62%. Pay yourself at 62. It never comes back to 50. It goes from 62 to 70. You pay yourself at 70. We're aiming for up here. Just using an internal range liquidity hunt on this range. And just say, all right, now I want to go, if it gets to 75, I'll move to 70. If it gets to 78%, I'll move to 75. And if it reaches 79%, which it didn't do, it came back and took you out right there at 75. So you're out of that trade. Now, if you're squabbling over this thing, you're whining over that and say, I missed all that. No, you get back and wait for the range extension. So if it does get box to box, you say, I could have gone for my take profit model 2. Great. Or just trail your stop loss up using using take profit model 1, use it to trail your stop loss, but keep instead of scaling out, you just put your full trade on and let your full trade run. And as soon as it gets to 50% or 62%, let it sit till it runs to your objective. It hits your objective, great. Now what you want to look for is for this to run through this level for range extension. So before it hits that rejection block, we're looking right here on a weekly chart. We'll go right here on a daily. I'm just going to put a little box around this. This is more of a chat session today. I'm going to put a little box around this area right here. And I'm going to say, on a 1 week chart, if it breaks this level, this is what you're going to train your eyes to do now. Take notes here, Rom, because I'm giving you some gold. We're going to dig down here and find this. This is my area of interest. Oops. I'm looking right there. And I'm going to make these big, bold box so we know what to look for. On the weekly chart, I'm looking for in here. Now that I've taken that level, I'm looking on a daily chart or an hourly or a 4-hour chart to see if I can retap this level to go higher. So when it ran through here, is there a point here where it closed above it, came back, tapped it, and then continue going higher? So you can get back in sync. So while it ran to here, you pay yourself and you go, if it runs through there, I'm looking for that to catch that on a run higher. So go to your daily chart and we start to look right here on the daily chart for an opportunity to catch our reversal. So we have it pop through. Let me have a look at that one there. Nope. So these are just little wicks. We have a body get through there. So you just go, the daily chart looks like it's ripping through. So now go to a 4-hour chart and we look for, where's that level? It's going to get harder to find it now. Oh, 4-hour chart doesn't go back that far. Oh, it's a September one, that's why. So anyway, back when it was going there, you look for that opportunity to catch that reversal. Where was that one? Daily. Oh, it's right here. That's June. Oh, yeah. Yeah, it's back in the June contract. So you'll look in your June contracts and look for the opportunity to catch the reverse right here on the 4-hour or 1 hour to come back and tap that and catch that for a range extension for a continuation to the upside. There's your next objective right there. You trade through it. You want to see it come back and tap it. If it takes out the high, you look for the last up close candle and keep going higher. So sorry, I can't give you the example, but you'd be looking right in here for that continuation on the weekly. So you can see how this, what I showed you on the 1 minute chart or the 15-second chart, is the same thing you're looking for this huge run and range extension on a 1 week chart for a mega trade. And that you would have been in that trade since April, and then you would have got out of it in June, and then you would have got back into it again sometime late June and continued going higher. That's staying in sync with the market. At least that's my idea of it anyway, for what it's worth for you. For what it's worth. Such beautiful price action, especially after yesterday's trash. Yes, gold. Thank you. I have to go, but we'll rewatch it to the end. Thank you, Darren. You're welcome, Rom. Take care, man. Long partial. That's a nice one right here. Off that high, you trade through it, go higher. See, I got this change in direction right here. But you see what he's doing. If that's what you got into, Hadi is looking for this candle to get retapped, and then he's looking for it to body to close back above here. It does, comes back inside, continue to go higher. Pay yourself a partial here, and you're inside this breaker here now, right? This little swing is taken out here. You want to see that we have a swing point. So you want to see this get taken. See how we're inside this little imbalance right now? Get a body above that, come back, use this as support, mean threshold, get through that, take this rejection block right here, and then aim for the next one, so on and so forth. There's your premium box up here. So doing your cam model, I keep saying cam model, don't I? Keep doing your box to box trading. 1 minute chart. He's aiming for here or this one. This would be a premium 1, premium 2, premium 3, and then look for more payment up there. Nice long continuation off the 1 minute. Look at that. Body trades above it. You come back to it. Right on the mean threshold. How many times have I told you about the mean threshold of that candle? Look at that. Beautiful continuation. Take a screenshot for this right here. You see me talk about this all the time. And it's right on a Tibbs 18. Right on a Tibbs as well. And I know you guys aren't doing Tibbs anymore, but you'll see it pop its little head up every once in a while. And you go, damn, that Tibbs is just a beautiful thing when it happens, man. You're back into this breaker now. And that's a 21. So you'd expect to see that roll over here now and come back down into a 27. If it runs through there, expect more continuation to the upside. So I like to use these Tibbs as there's much more finessing with Tibbs, but I expect to see that as a high and then run back into a 27. Could be this candle in the mean threshold. Watch this reverse potential here. We have not taken that high, so look for the next bull trap potential. You're already up, way up into the premium portion of this range already, so you see a change in direction. If you lose the mean threshold, look for another run into this low and back down into a deeper range. See how we didn't stop right on that already? If it goes through 1, 2, 3 levels, your ass is next. Box to box strategy out. Nailed it. Nailed it. Good for you, Hadi. Good for you, buddy. Same, bro. Just follow the rules. Just smaller range and follow the Darren. Fewer contracts. He's the bust up. I'm glad you got that, Hadi. I'm glad you got the that trade there. That's gorgeous. Well done. And Russell, way to go, Russell. Follow the rules, man. Follow the rules. Bring your trading buddies. Bring them here. We'll show them how to stay on the horse. All I want this to do is give you guys I'll give you my trade setups and the trade setups Michael's shared in the past, but I'm going to give them to you as levels that are clean. When they're clean, like you compare that price action to yesterday's crap that we had. Look at how choppy that crap is yesterday. Right? That's high resistance. Don't even be playing in that. Don't even be playing in that. That is such a waste of time and energy to even have these buttons on your page. Study price action, sure, but don't be tempted to play in that. When you see clean price action and you see it moving with a sense of certainty, it pops above, comes back, gives you, that was my entry this morning, right off of, well, not my entry, but I saw this here. My entry was right here. And you catch that for a run up for the higher time frame objective, you know, you're done. Your trade's done for the day. And you get to capitalize on some of the extra little smaller ones or on another chart where price action's acting clean, avoid that stuff you saw yesterday and wait for this opportunity or hunt all the other assets that are out there. There's like, I think I've got almost 50 assets up here for you to play in and find a smoother setup. Because when it's smooth, you guys will catch some amazing, amazing trades. Okay? Much cleaner. Yeah, yesterday equals pain and regret. Waiting for today, pain and discipline. Yes, Ollie, I love it. I love it, brother. Yes. Get back through here now. 752, you want to see it close above that. Not just a run back into the midnight. See that midnight open level? We're inside that whole midnight open range right now. So we're going to use midnight open to accelerate. We're inside that midnight open range. So right now I'm flat and have no idea where it wants to go. Ideally, I'm slightly bearish until we get above there on a close. Then I'm bullish again for this next upside. Premium box number. Pay yourself 1, 2, 3. Premium 3. Yes, I like the way you're thinking, Hadi. Bull trap. Be careful of the bull trap. We have not got a body above here yet. A couple of wicks up there. People, when they watch this, you go, oh no, it's going higher now. Stop acting on this candle. That's the psych candle. That one will screw with your head. Wait for it to close. There, now it's closed above. Now you can go, I'm expecting range extension now. So I'm expecting this level to hold support price and push higher. Or it could just take off and you don't get the opportunity to get in. But that's the level you want to see supported. Stop loss would sit here because you don't want to see this get taken to the downside because then it's a slight market structure shift. I want to see that hold and go higher. And I think, did that pop up there? And that's already popped up just above that high already. So you want to see this hold price right in here, right off midnight candle. I'm all right with that too. Right there. Poof, and go higher. Stop loss would be here. It is very high in the premium, so I like the way you guys are thinking. I'm not paying a premium price for just to get another little piece, paying a premium for a bull or a potential bull trap and that reverse on me and never reach that premium array. See how we're already wicking through here? Consolidation, wait for a market structure shift above or below here now. So for here, if you're going to pay a premium for something to go higher, you want to see a body break through here, pay this to run your extension higher. You're expecting a range to go higher once you break that level. So you're still bullish all the time your body is closing above or at that level. Wick's doing some damage. You're still above it. So you're still bullish. Your stop loss would be sitting here. You would have got squeezed really good right there. As soon as it takes that high, pay yourself. And it's the very first immediate high. You always pay yourself at the immediate high. Look how close you would have been squeezed there. There, pay yourself there. You're risk-free now, and let it run. So if this ends up being a consolidation for a while, at least you paid yourself there. You're at a risk-free trade, and you're aiming for that objective there still. for equal highs here now. You want to see a body get above here. We still got a body up above here. We had a bit of wick damage. Didn't take the stop. You paid yourself there. You're risk-free. And now you're out. There you go. Well, I made it 5 handles there, whatever. Expecting it to go higher. If it did, great. If it didn't, ooh, did I ever get a squeeze there? That's the kind of consolidation that's paying in a premium for a higher premium, right? So I like the way you define that as not an entry for you. That's a good set of rules, Russell and Hadi, that you're using to support not entering into every single opportunity. Just because that showed you that it's going to run for a high, which it did a range extension right there, and that's it. That's the range extension you get. If you're expecting higher, the rule is if it breaks that high, it's a range extension. Extended that range just a few more handles, then it's pulled back in, and now we're back below that, trading back into it. Now I'm expecting this range to get extended. I'm inside this tiny little thing here now with one fair value gap. So yeah, I want to see that hold, roll over, and take this low here now. If it trades back through that level again, then you're looking for support to take that high. That's the trouble about being in a consolidation and only having one premium array or one array to play with, right? Rejection block. So I want to see this trade back down into rejection block or lower and get right down into this 830 or marks middle of the 3-hour candle. Oh, we're above here now, and we're above that level, so you're going higher again. Stay on the horse. It's spinning around, trying to flip you off, right? There, you want to see that push higher. We're aiming back for this one again. And yes, changing your mind, you've got to be prepared to change your mind when it's consolidating and it's bouncing off the specific arrays inside the candles. You got to be prepared to change your mind. There's the midnight candle. We're above the inversion. We're below it. Wanted it to go lower. Went above it. Now you want it to go higher. And again, you're not trading inside that. That's just a mess right now. But if you, the first initial trade above that, you went, okay, now I want to see that range extension get lower. It pulls back into the range. Wait for market structure shift above here. Hadi and Russell will be sitting there giggling to themselves if this suddenly just goes boom and turns into a gigantic bull trap. It gets you thinking, and then think you want to go higher, and then it slams back against you. They'll be like, I knew it. Breaker held. No bodies above here yet. And now we're back into that guy again. You see that? So if it trades below it, now you want to see, let's go down below this low again. Then you may go, that's not worth it for me to play. And of course, I wouldn't want to play in that either. It's just back and forth, changing your mind over and over and over again, consolidating. So when you see consolidation, switch to a CAM model entry and say, want to see now is a displacement above or below this level. This would be nice to see this pop up into here, reverse for a CAM 3. So you have a CAM 1, 2, and then 50% of that leg would be a CAM 3 for continuation back down lower. Or pop down, run back up, CAM 1, 2, 3 on that one, and then push higher. So many options, so many ways to see it. Stop loss is the key. So many opportunities today. Wait for the right ones. If the body does close, you do not enter. Number one rule. Stop loss is number one. Does not close above you. I mean, Yes, I was going to say it does. If it does close, there is an opportunity. Does not close above. Exactly. Yes, I agree. Just a pop in today. Hope all is well. Many to-dos today, like the uptick today. Yes. Oh, it was great today, Derek. We missed you, buddy. It was a great day. There's some great opportunities out there. Market's a lot more smoother this morning versus yesterday's nightmare. So yeah, I hope you have a great day. Hope the weather down there is really, really good. Yeah, in a little accumulation phase, wait for one side to get swept, then body close in the opposite side and you'll avoid the chop. Patience is the key. Oh, I'm definitely done for the day. I've had a really good 2 days already. Consolidation, wait for displacement, key level, premium level. This would have been nice to see accumulation right at 50% of this range and then say, oh, what are we targeting? Are we targeting discount or are we targeting premium? Or discount 1, 2, 3. So this is a great opportunity just to study price now. Just watch it. Body's above it again, taps it again, range extension. Again, not that I'm looking for that as a trade opportunity because there's only one. There was no discount box in here. There's just that premium and you're just looking for a range to keep extending all the time. We get to stay above it. If we pop below it, we're looking for a run back into this candle's mean threshold. It didn't do it. Just kept holding, running through it, back and forth, but still finding support at the top of it, popping up. Nothing big yet, so this could be just one of those warpy looking consolidations. Almost done for the day. I will stay with you guys around 11. Okay, so you've got another couple of hours. Is that New York time or your time? I think you are on New York time, aren't you? Toronto? You're 2 hours ahead of us. Look at that immediate rebalance and then run right back up inside that range. This was a good video today. It's nice when the markets are giving you some clean price action. New York time. Got it. Let's go back to the rest of these little charts here. Let's look at our oil. Basically, the two levels we're looking for have been hit. And it's not really doing much right now. It's a 1 hour chart. So now, I don't know if you're still in here, Craig, or not. So now you're looking for wicks. You're looking at wicks, chopping wicks into the quarter theory, quarters, and then watching what it does here. And we're back inside this. So if you want to see this run higher, we want to see this take this low. I want to see it get down below that low, one push down, then run up, use this as support to go higher, unless we get another fair value gap in here somewhere. I'd want to see, in order to run on that liquidity, you've got to get above here and the bull trap. That's the bull trap right there. snapshot and take you and roll over and come lower. And because we haven't swept that low just yet, I'm wondering if we come back inside this level, roll over, then take that low, create a fair value gap, and then finally come back up and take down. So it looks something like this. So from here, it would trade up to here or here, roll over, drop down, create a little fair value gap, come into it, and then finally run higher like that. And that bull trap holds price. And the opposite can be true as well for here. This little swing back up into this candle's low. It's been hit. So you want to see that just kind of roll down here. I want to see that create this leg up to here, then here, then higher. You know what I'm saying? So if it just rolled over here now, went straight down, and then created this bottom part of the leg with a fair value gap in it, trade into it, and then go higher, then I'd be all right with that as well. So this is just one that it could go up higher, fail at the bull trap, come back down, do its thing, and then go higher and aim for this liquidity up here. And if it goes down and comes back and uses this imbalance right here, that line as support, it could do this. It could go like that to that level and go right down. Or if a body gets below that level right there, you can just see this. Tap one or two like that, be there or there, and then rip down from there. So there's different types of scenarios that I'd be looking for off this in order to, so those are the three kind of predictions that I'd want to make inside oil to kind of see where it would go. So I'm watching very closely how that's being handled, and the fact that we're in this low resistance. I'd like to see that just rip through there one more time and pop up. It's got to take out a low though for me to get a little excited about this one here. Yes, sleepiest AM crude price. Actually, I've seen that crude been looking choppy now for 15 minutes. Price is waffling. I love it. He's using my waffle expression. It's waffling. First fair value cap is so far. That's the 15-minute level. It's holding off of here. So that new week opening gap, got our price, our SIBI is right in our discount portion right here. Here's our BISI. We ran through it, found support, push higher, rejection block. Pay yourself at rejection blocks. Change of direction, came back up inside it, went lower, took the lows, change of direction, traded above it, come back inside it, go higher, take the highs, just wicked up to the highs. Body still respects that level. Change of direction, trade back into it, go lower, take out the lows, come back to the discount box. There's the discount box 1, discount box 2, hit, and now we're kind of just waffling around inside here. The waffle. It's a waffle iron. So I can still see the logic in there on a 15-minute chart in oil. That's how these boys, yes, look at that, swept that level. Now we've got new lows in gas. Oh no, we don't have new lows. We're aiming for new lows now. So rejection block is sitting at 1248 and 1242, 12.35. Looking. That's new lows, like for a long time, new lows. So that'd be a great opportunity to catch yourself a summer deal. $12. It's a great opportunity to catch you. If that even makes it back up into that premium there, 13 something, that's still 10% return on your money. It doesn't pay a dividend, but it is a nice little, if we can get below that low or that rejection block and get $1 out of that, that's a 10%, $1.20, $1.25, you'll get 10% out of that. We found support off that level we were looking for a couple of days ago. Great. Now we're traded back into the mean threshold of this candle. And if you look, go up, and then draw it across. Remember that little imbalance busy we're looking for right here? Right there, right on the money. Just nailed it. That's our premium box. The German index, the Mr. DAX. Internal range liquidity, we talked about that this morning. Trade below this level here on a close, and then you want to see it come back, and we see if that breaker that catches, well, not really a great breaker. We'd have to look at this one here. We trade through that one on a close, which we did. You come back inside it. You count all three of these candles here for this run above this little high here. Come back inside it. Ideally, 1, 2, and then you want to see immediate rebalance right here. That's a SIBI. I treat that like a SIBI. You come up inside it, reject off of it. Now you come back into it again. Don't like the fact we came back into it. I wanted to see that reject off that and see it come back into this. SIBI you got down here now. Oh, we've already hit it. Okay. Taking on from premium to discount already. See if that if this holds price now above here. Now that we swept this low and swept these lows, they still look like they want to go. So if we go above here, you go between this one and this one. You're stuck between the range there. So you got to get above that to run for mean threshold and old high. Reach for that level above you in the DAX. Gold. I got gold. That's where you got to kind of wait for it. It's not super clean, obviously. It's got super choppy, but downside objective is still here. As sloppy as that is, it's still reaching for it. Bitcoin. Get out of our trade at the level we were looking for this morning. It's beautiful, right at that inversion. Back down inside a CAM Model 1 entry. Look at that consolidation. Big displacement candle, CAM Model 1. Tap it, and you're right back up. Rejection block, pay yourself. So from there is the perfect entry at 118,645 to rejection block 119,286. That's $600 in run up. 600 bucks, and we're the potential is for us to keep going back up into 25-50% of this wick and keep going up into that discount box. And then right up in here, I'm going to change bull trap to All right, so banks have come back up into our premium level, except we're wrenching. This one's doing great. This one's popped back through that level. Now I want to see it provide some support here and push off and keep coming higher into this range here. So this bank's doing good. This bank's way above our level. It came, popped up, closed above it, tapped it, gave you the indication it was running for the highs. It did. We had an upside objective of 184.06. It hit that, and now it's still going higher. This one has not got, Toronto Dominion has not got back up there. Nova Scotia has traded above it today, opened above it, on it, and then going higher. So we're looking for this high and then look for a continuation on the upside. Laurentian has tapped that, came back below the lows, and now it's just backing around inside here. So it's got to get back above 31.15 for me. Montreal's back inside that level for support. Now you want to see it get above that, like these guys did, that one did, and that one. And you want to see it get higher. You want to see it get higher. It's already above this premium level. You want to see it go higher and get through the bull candle above us. Are you out of here? Stand by. See you guys tomorrow. Have a great day. See you, T. Thanks, Darren. You're welcome, T. Sorry you're. See you back on the charts in 15 minutes. Partial at ES, forming bearish SMT. Took in the high, reverse. You want to see this accelerate through here. It's doing that. It's right at the macro starting now. I like that for a short. Right at a macro. Taking it all time. If you can get through here, there's a little tiny one here. Otherwise, that'll be your box to box. If you like what we're doing here, by all means, hit the like button. We do appreciate your likes. And you're welcome to join us if you haven't subscribed. Subscribe to the channel. We're happy to help out any way we can. If we get back through here, I'm on the wrong side of it. You got to give it some wiggle room there. All the way up to 64.40. The ideal now is for it to keep coming lower, not even so much as wick up there. Leave that little portion open. Just start coming. So how this next candle acts after this candle's finished, for me, I start looking at that going, I don't want to see a revisit of this. I want to see this just leave. If it's clean, it'll just come straight down. It'll take out this low and then use this candle as support to come lower. If it waffles around inside here, not interested. So this is demanding for price action what you want. So I don't even want to see a wick get up there now. I will give it the opportunity to wick up to 44.075. See that? Not really kicking off of it the way we want it to. No, it's just sitting there. It's got to come. Let's go down, down, down. There's an immediate rebalance right here. Small range, premium, discount inside the small little block here. There, it just popped up inside that to 40.50. That's it. Now stop loss will sit right on top of that. So far, so good. So we've got the wicks. We talked about the wicks splitting into multiple levels. 1, 2, 3, 4. So you're already up through the mean threshold of that. Back up to this breaker. You've wicked through that breaker already once before. So I expect to see that bull trap get broken and then use that for support to reach for the upside objective above us. Yeah, you're already above 50% of it here. So I'm expecting to see 75 in the high and that get taken on a close. But be careful, the bull trap can still hold you back. You want to see a body get above this level. So NASDAQ, now we're above this level. See that? Tap it. You want to see that head out here now. When you see it get through this immediate rebalance on the higher time frame, it's high of the immediate rebalance on the hourly and the 4-hour rejection block. See it get back up on top of that and get back into this premium box. That's a nice tap and go. Remember, we're talking about if you can get back through this level and find support at that to run for the new high, right there. So as soon as it takes out the next high candle, move your stop loss to break even and let it run. Because if it reverses on the mean threshold of this candle, at least you paid yourself and you got to risk free right away. If it's got intentions of going higher, we shouldn't see it drop all the way back into this level again. I guess you could see it come back into the consequent encroachment of that. Yeah, you'd have to sit down here. That's open still. Let's tap the high, which is nice. You want to see that leave here now. It's got intentions of running higher. You want to see it just rip through here and start going higher and leave that open, which is what that's doing. Lovely. There's the rejection block right there. Pay yourself. Pay yourself. Man, they're really pushing this Tai Chi stuff down, eh? Looks like it may track the wick or higher. As those 3 o'clocks are sure coming into play. I wonder if that's an ICT teaching. Never heard of it. If it is, that's what Mark's been calling for. So there's the 3-hour Mark's. He's got 3-hour retest at 3 hours. We went above it, retested the 3-hour. Now you're hitting the next 3-hour above us. I think I had that as Mark's last 3 o'clock candle right there. Look at the time down here. That's 3 o'clock. That's all a 3 a.m. candle. So it tested the 3 a.m., came back and it tested the 3 a.m. So we went 3 a.m. to 3 a.m. Hit the 3 a.m. and came back to the 3 a.m. and then went back to the 3 a.m. again. So if you call Mark's 3 to 3 to 3 to 3, that's like box to box to box. Mark's 3 a.m. candle to the 3 a.m. candle, back to the 3 a.m. candle, and then back to the 3 a.m. candle again. That Mark understands that. So there's the range extension coming up now, right from a perfect entry. You're into 50% of the wick. And there's the range extension. Perfect. Pay yourself. Big box to box, yeah. They're using the 3 a.m. candle. Sheesh, man. I'd have to see that enough times to have faith in the 3 a.m. candle, using it as support to go higher. Look at the size of that 3 a.m. candle. You're right through it. You're above it. You're in it. Yeah, I would probably never use that, but it's nice to know that you're using it. You found some way to make it work for you. I use those little tiny points. Yours is more of a macro perspective. I like it. It works for you. Now you want to see this candle. It's high or it's close. Find support. There's the high right there. We traded above it. You come back into it right here, just below that 50% there. Wait for this high to get taken with a body and for this premium array to finally get hit, which it does. Now you want to see that premium array get closed above. If not, rejection block. Pay yourself a rejection block. We've bitten through that one. We've bitten into this one now. And now you want to see, is this holding? And now we're just rolling over now to come back lower and deny those people the high yet again. Now we're using this to lever through this. That level. You want to see that lever that now and start pushing higher. So this has got to provide a level of support, and that's got to break to the upside. Start reaching for the next high, the new high. Finding support off of that 4-hour rejection block. And this 1-minute chart. Strangely enough, all seem to be lining up right on that 4-hour rejection block. Break through it, find support at it, push higher, break through the premium level, open on it, go higher. Range extension is in the cards next for 822. And this is a tips 10. So you should get a 9-10 turn. If you don't, if 11 takes out 10, look for higher prices. There's your high. There's your high taken. Range extension completed. Next one is the 1-hour rejection block right there. We have to get you to do like Ollie did, Mark, and set up a video presentation where you can kind of sit there and explain this kind of visually, step by step, your setup. Because I'm not going to do it any justice. I don't understand it completely enough. Like, I understand HIDSIGHT 830, so it's your setup. If you're ever willing to sit down and do a video or a presentation with us, then I'll set up a meeting on Teams, and we can go over that if you want. If you want to share that with people on a video, we'll post it on our channel there, and all our people can check it out. It'll have all your name all over it. I'm not taking any credit for it. So if you're into that one day, I'll be happy to set that up. I found it just backtesting one day, and it makes sense to me to see the sessions as candles. And if they don't touch, it creates a fair value gap between sessions. So even everything is fractal, everything should touch. I'll be glad to share it. I'll put a presentation together. Oh, that'd be awesome. I'd really appreciate that, Mark. Thank you. That's what I'm sure everybody else. Yeah, just let me know when you're ready, and we'll set up a time and you can do a presentation to everybody. That'd be great. So you can see the 1 hour rejection block. We've ran through that. We found support at this. Now you want to see if that keeps going higher. Yeah, send Mark the love. Send him the love. Thank you very much. Thank you, thank you, thank you. Appreciate it. That's what the community is about. Sharing what you know. I share with you guys everything I can think of every day. It's all for free. No one's charging you for anything. You might have to endure a few commercials here and there, but believe me, I'm not making a living off of ad revenue. So we've been able to give one guy, it took me forever to do it, but we've been able to pay for, I gave one guy some money because we couldn't get that whole trading platform sorted out. I couldn't find somebody willing to let me pay for somebody else's trade for just a month. They wanted a continuous monthly payment. So I was like, no, I just want to pay for one. They wouldn't do it. And you have to put your own credit card down for your own name. And, so putting it down for somebody else, they wouldn't let me do it. Anyway, so the ad revenue, Fiddlesticks was the first guy that got a chance to get a couple of bucks. I didn't make any. I made like $100 on ad revenue over, since I started making ad revenue. I'd made $100, so I gave that to Fiddlesticks as my first official helping somebody out with some finances. But we've been able to help out people down in Kenya. So we helped out a school down there, which I'm quite proud of, and that's what it's about, man. Make some money and help out your fellow man, women, children. Help people out, man. That's what we're here for. That's what I'm here for. I give you my time. I give you as much as I can to help out. I'm not going to get it perfect. You'll see some impulsive moments where I'll take trades where I go, ugh, that was not the best trade. You get to see it live and raw, man. Nothing's perfect. So see how we break above that high? Now you want to see this high act as support. Finding support right at that level. See right there? Find support. And now you want to see that make a new high. Start pushing higher. Look for this. We're into the key levels I gave you on the weekend. And the levels are finally getting hit at the 1 hour and the wick of the consequent encroachment of the hourly wick. That's been banging around on this. You want to see it pop through there and make this new buy side liquidity new high. Hardly any commercials today. Oh, yeah, I've had a couple. The other day, it was just like pounding through them. It's going nuts. That 301 is my ad donation. That 0.1. Yeah, you get your penny, your ad donation. Craig gets all this free stuff and he gripes about the commercials. His penny in revenue you created. I think I've given you more than your penny's worth, man. If I ever get good trading indices, I won't be able to trade crude oil. Crude oil's got some great opportunities. Make a new high. There you go. Ba-boom. New highs made for the day. Ding dong, the witch is dead. It's all done. Now you look for any opportunity to see if there's a reversal. And we're getting into the lunch hour. So we can retrace back into the range now that we've created a new high. Oh, look at that. Another ad revenue. You must have heard me. Oh, you want more ads? I'll send you more ads. Look at that, bouncing right off that all-time high as well. Let's see if it goes higher now. I don't know how to trade indices despite hearing all this training. Craig, if you can trade oil using the same principles that I'm showing you here, you can trade anything. Doesn't matter. That's the part you have to kind of get over, even at be at 67. I'm a young guy compared to you. You're old already. You're 67. I'll be changing that. I'll be saying, no, I'm not old yet. Anyway, 67, you can still learn it, man. You can still, whatever principles I'm showing you on here is exactly the same for oil. Anything, any asset that creates candles, algorithmically driven, exact same thing. I have two streams running when I'm at home. Like now, I let one just run through the ads for some bonus change. Thanks, appreciate that, Russell. It's just helping other people out. Whatever I make off of this thing, it's going to go in for, I'm going to help people out with it. Donation stuff. I'm putting my time in to help you guys out. But whatever money I make on here, that goes towards helping people, a worthy cause of some sort. And then we'll find out what it is. I've done like Operation Smile, where the kids with the cleft palates. I've done things like Leprosy Foundation. I did a few years with them. I've sponsored kids. I've had like 3 or 4 sponsored children overseas, and some animal stuff I've done. Not that I'm looking for appraisal on that. Those are just things I want to try and help out, some areas of interest for me. So I'm glad I've been able to, fortunate enough to be able to help some people out and helping out some schools. That school in Kenya was so, or Kenya, my wife hates when I say Kenya. It was so great just to see. We had 16 of us make a donation to the school to help them out, and they really need it too. And they're such a great school. They just won this competition. They made it all the way to their school competition, the area competition. They won that. They won their regional competition. Then they went on to a national competition, and they got second place in the nationals. So Benson and the kids down in the Masai Mara, congratulations. I'm very happy with you guys. We're quite happy to hear that they're doing well. And they'll get them again next year. So that's what it is, man. That's what life's about. If you can help out some people along the way, that's what we're here for. That's what I am. I have 2 streams, Russell. New all-time high. Now remember, time and price, right? We're looking for a lunch hour to make a 12 o'clock turn. If we don't turn at 12 o'clock or at 12 to 12:30, then you're probably going to run all the way up into 1400, which is 2 standard deviations. I'm looking for 23,981. That's my upside objective right there. That was from a pull I made on Monday. I'm looking for that level. If we break trade below here and take this low out, I'm using this to come lower into the range during lunch hour. But I'm making money in Disney longs also. Good. If you're making money in Disney, but you have a set strategy for Disney, you know, like if it's below a certain level, I'll buy it, which is good. If you're in a Disney long there, I don't know where you got your long. Unless you bought right there. Let's trade that opened right on that high, traded back to the mean threshold of this candle, and now it's going higher. So I'd be looking right here. I fumble around with it, and all I have to do is that. And I'd expect to see it reach up into this, the top part of this box, premium box. There's your discount, premium. You break that high. You want to see it come back into this candle, but it literally opened on that candle. What's this candle's high here? This candle's high is 1306. This candle's open is 1307. So it actually did close above that high, or open above that high. So tapping any one of that is your run to run higher. Comes back right up to mean threshold, closes higher, pay yourself above that high, 50%, 62%. Take profit model 1 inside here, or run for the premium take profit model 2, or run for take profit model 3. And if you can get through that thing, wait for a model 3 entry. Because you'd be looking at these old highs. When do we go short in indices? I just showed you right here. If we can get through here and here, that's the short inside this range. Next objective is here. Break that. Next objective is down here. So just kind of keep your eye on this level right here. And then your fail-safe is that candle right there. So we want to see it trade aggressively through here. I'd like to see that just one candle rip through this and this, end up on the other side here, close, come back and use this as support to push lower. If we're just coming back to tap this to go higher, then you haven't got a reversal yet. And we'll be in Toronto this October. Anybody's interested in meeting us in Toronto? We'll be in Toronto this October. So it's right off that buy side high again. Remember when we want to see these highs get revisited? You tap them and then go higher. Tap them and then go higher. That's just a higher time frame tap and go higher. So far, no reversal yet. No change in direction. We're still going higher. What would be the rule to enter on that though? What do you mean, like the low? You want to see market structure shift. So first of all, you want to see a change in direction, market structure shift with a body below it, and then a tap back into this. Stop loss would be just above this, the high of this fair value gap here. Your fail safe would be somewhere in the middle of this candle. I wouldn't want to see it here, but because that is so close, it makes up the bottom half of your BISI. You'd have to give it wiggle room into this candle's low or the high of it. So you'd have to get just above that. You don't want to see any wicks getting up in there. So you want to see it trade through here with a body, trade back into 1, 2, 3, 4, 5, 6. There's 6 different levels or six different arrays that can reach into. And if it runs through all 6 of them, chances are, and especially if it closes above that, then close your stop loss because it's on the wrong side of it. You're going higher. All it did was just run down for liquidity. That's why we're going to see a body get through here, not just a wick. So watch this level again right here. I'll pop a trade on and I'll show you, and I'll show you where it fails. So we want to see full candle kind of close through. You got 9 seconds. Come on. 5, not a wick. That's just into the mean threshold. I don't want to see that. There, we dropped below it, popped into it. Now, I want to see that. Just tap this, come down lower. So that's technically an entry, but because we're so close, you want to see a market structure shift, just to give you a little bit more of a buffer here. We could run all the way back up to consequent encroachment. This is good. That's what you want to see. Yeah, you want to see a market structure shift. Otherwise, we're just trading internal range liquidity, and you're already into an extreme discount already, right here. And you've only got one array. Notice there's no discount array inside here in terms of like SIBI. It's just so tight. So you want to wait for it to bust through here, break some market structure shift. Use this and this as support to come lower. If you start to cut all the way back through that and start to wick above that, then I haven't got in. We could be revisiting this high again. So just be patient enough to wait for your market structure shift. There's the retap to that consequent encroachment we're talking about. Now you want to see this come down. So entry 1, entry 2. Inside this range, not worth the aggro. So I'd wait for, there's your rejection block. If you're trading to that, you're trying to grab a quick couple of handles right there. Pay yourself. Because if that reverses on you, you'll be glad you paid yourself at the rejection block. So anyway, we'll just wait for the market structure shift to occur first. We've got a body now, close below that close. but no body below the wick here. It's looking stronger, so I like this. If we can get to a mean threshold right there and reject off of that, which we're not. So don't forget, this could be the bear trap now, right? If we don't get a body trade below here, the bear trap snaps shut, comes back and takes you out. So we wait for market structure shift. If you're just doing that quick liquidity hunt from there to there, I think that was 50% right there. Stand by. Yeah, right off 50%. Run, pay yourself, and wait for a body. That's like precision. That's like super confidence. You know what to look for specific PD rates anyway. Short ES 64.48 for fun. That's flight confirmation for bearish breaker. See, I would enter the constant code to the first. Again. ES has not made an all-time high yet. So could see it run back up. So if you trade off of here, come out, you should have paid yourself below that low. Because if it runs back through you now and takes out this mean threshold as well, then that's the next bull trap. So bear trap, bull trap. The bear trap snapped shut, took your feet out, took your hand off because you thought it was going to go lower. We wait for market structure to shift. If you're just trading that internal range stuff, the high, the mean threshold is all you want to aim for, or the rejection block. That one, it did just do a fraction below that low, but we have got to get a body down there. So now you're back up to the breaker that took out that low. That candle's low is 21.50. This candle's low is 21.25. So it's like a quarter of a handle below that low. It's a range extension. It traded, took out the low with a wick and pulled right back. We did not get a body through it. So you can see even in these tight consolidations, just a quarter of a tick. A quarter of a tick. It's just that's what you get for consolidations. So now we've traded back above this level on a close. We've come back to the consequent encroachment, and now we're looking for this mean threshold to go. As Russell pointed out, ES hasn't made an all-time high yet, so that's pulling higher. So you can see how NQ is responding to that. It did not make a lower low. Like from a body perspective, it did with a wick, but didn't make a low low. What did ES do? Did ES do a... yeah, ES did. Traded through that level on the close. It came back into it. Back to the next rejection block. Swing. Body trades above it. You want to see it come back into this and take that candle's high. Run for the highs. We're right back up into the mean threshold of this candle. So you're between here now and this candle. So you see how frustrating that could be, Kamal, when if you said, oh, I would have been in short from there, well, then you better have paid yourself there. Because if you're going, I'm going short, and I'm aiming for that discount box that I was talking about down here, you haven't got confirmation that that's the range yet until a body breaks that. I'll see what I see what you're talking about. I see what you're talking about. Okay, NQ needs to follow ES, but nothing is absolute, of course. Stopped out green. So now would you go long since it's failed to go down? No, it definitely wouldn't go long yet. Remember, this bear trap, that bull trap. Would you go long now that you've traded above that high? I'm expecting this mean threshold to give way. So that's just internal range liquidity hunting. And this is too small to hunt liquidity in, as far as I'm concerned. So wait for a market structure shift or market structure. In this case, it would have to be market structure shift with a body. So you not just, yes, it traded above it and I can go long. What traded below it and I can go short. Right? When it's in a tight little consolidation like that, it's not worth your aggro. It's different when it's something like this where it trades, if it trades above it, you want to say, okay, now I've got more of a run. If it trades below, like here, trades above it, great, come back and give me, look to the candle to the left, doesn't have it, so looking for 50%, get back below 50% to run, mean threshold, comes back to the mean threshold, goes higher. I'm trying to give you a good example. So you see how this candle here to the left, when you see a body get below it, body gets below it, you want to come back up using this. This is what we're looking at here. See this candle? It's like this candle. This is what we're looking for here. I want to see a body get below that candle's wick. See that body gets below it? Now you want to see this candle and that fair value gap act as support to go lower, which is exactly what we were looking for right here. So we want to see a body get below here. It did not. So compare those two. There, did not. It broke below it here, did not break below it there. Wicks don't count. Body does. Then it comes back up into that level, which is what we're looking for here. This didn't, so it ran through it, and now all of a sudden we've got this upside run. So you see how that you gotta look for support. That way you would have been sitting around in here for a while, bouncing off that premium. We want to see that hold price and then roll over, take out the next candle on the downside. It does come back, find support at it, and continue pushing lower. You know what I'm saying? Do you see the comparison between those two? Screen capture that, put a big circle around that. Like this. So you got comparisons to see what it was I was pointing out, what it was I was looking for. And when the bull trap or the bear trap fails, and when the bear trap lets go, and you can step on it, and it doesn't trigger it, and you keep going. That's the difference between the two. So screen capture that, make notes in the margins or wherever there's free space, make some notes on what I just gave you. Go back over the video and watch that again. Thanks for today, Darren. As always, a great pleasure to follow you and the other traders. Thanks, Hans. I'm glad you got your regular trading hour gap filled again. This is beautiful. Yeah, I see what you're talking about. Okay, so do you look for SMT when you can't get in because it's waffling? Nope, I don't use SMT. I know the other guys are using it a lot, but I just can't rely on it. 1 minute SMT looks great, then all of a sudden it goes against it and SMT disappears. So, like Ollie says, SMT is probably better off for specific time frames like macros, old highs, like time and price is critical where SMT can be used. So I just constantly look for a market structure shift where I look for an inversion to get taken to the upside. So there, you get taken to the upside. So you want to find support. Now watching this mean threshold give way, I want to see if this bull trap is triggered and it rolls over and takes me out. This one here was triggered, did not trade below it. So if the bull trap fails, it should go straight up above it, come back and find support. I want to see a body close above here. Otherwise, bear trap sets off, bull trap sets off, and it comes back into the range again. So you have to see a break in structure. Okay, Abs, take care, buddy. See you tomorrow. I'm almost done as well. I've been here for 3 hours, 3.5 hours, almost 4 hours already this morning. Any other questions come out? You understand what it was it's pointing out there? So to stay on the horse here right now, we're bullish because we've broken this level. To the downside, we wanted to see a market structure shift. We did not get that. So we pulled back through this thing, we traded above it. Now you want to see this consequent encroachment, holding price, it is. Mean threshold, you want to see that give way, it did. Now you're using that for support, push higher, takes the range, looks good. Now I want to see a body pop up above here and use this breaker as support. Because we went a quarter tick below that low. If we don't get a body above here, then bull trap sets off and you're back inside the range again. Bear, bull. Watch this a few more minutes just to see if it breaks out of this range, and then I'm done for the day. I've made my line on my stuff this morning on the first little bit of run. So how do you sharpen your edge? Meaning, how do you get more confirmations to enter a trade? Do you look at QQQ or other futures? No, I don't. I sharpen my edge by trusting these levels. The only thing you need, Kamal, is just my personal opinion, okay? This is just my personal opinion. I am not shooting your trading style down or what anybody else, advice anybody else gives you. This is just my little 5 cents worth of information you're going to hear throughout your life. Don't worry about all that noise. Just focus on pure price action study. Okay, just don't worry about QQQ and no offense to the people that use SMT, but SMT and all that stuff. Just focus on inversions, old highs, small ranges, when the range breaks, when the 50%, when the mean thresholds. Know your candles and know what levels are important inside candles, and just watch price action. Just stay in the 1 minute chart and watch it, because it's no different. And I've showed you this morning on a daily chart, on a weekly chart. This is no different on a 15-second chart to a 1 month chart. It is no different. It is fractal. Everything I'm showing you is fractal. If you're trying to get confirmation and all that stuff, it means you don't trust these levels. And I show you every single day, I show you these levels and how important they are and how they work. So you have to see it enough. All I can say is you have to see it enough times to prove that it works. Get your face stuck in these charts. Because trying to learn somebody else's new fancy trick on how to read price action and stuff, you're just adding more confusion and more noise. And eventually you're going to have to get back and see the charts. And you're going to have to get back into these precision data points that we're looking at to see if they hold price. And if you haven't seen it enough times in a day for me to show you, I'm looking at that freaking candle right there. It's got to hold price. It's got to leave from here. Otherwise, I'm looking at this spot. And if they hold, great. Now you know why. Because I'm looking for those precise points, right? I wanted to see that get taken. It didn't. We knew there was a trap. Got above us. Precision point. Precision point. Find precision. Then this mean threshold. We got above it. Look how many times we're nailing that data point. That's nothing to do with SMT. That's nothing to do with QQQ. There's nothing to do with whatever else anybody else is showing you. It's just a specific point inside an array that I want to see hold price. And if it fails, then I go back to my next one. So I'm looking at these two because that's the small little range that you start to trade inside now. If you break it with a wick, then you got a new one above you. Small candles, then I go, what's the highest one? What's its mean threshold? What's its open? What's the wick? What's the lowest down close candle? That's where I start hunting. I say, is there a fair value gap in there? Nope. Is there a fair value gap in here? Yeah, it's only one on that whole run down, and it's sitting right here. And that'd be no different if that was just a daily chart, just going back and forth, and we're stuck in a consolidation for weeks on end. Right? That's all I can say, man. I know it sounds, it's very biased, and I know it's my perspective, but hey, that's why you're here, right? You hear my perspective, you'll hear 10 different traders give you 10 different points of view. So Occam's razor, man. Theory of life, Occam's razor. The simplest solution is often the best. And it might sound complicated, but really it isn't. It's looking for the same data points every single day. And then just developing a set of rules that supports a trade model that you have, that's all. And then the next most painful thing is the discipline to keep it, to maintain it, right? So you have no body above this high yet. And these little tiny wicks, I'm not impressed with that. I want to see a body get above there. And I want to see a fair value gap form above it. Then I'm getting excited, right? Like this. See that high? See that fair value gap? That's what you want to see. And you want to see it pound right through there, get a body above it. Woohoo! Then come back into the mean threshold or the consequent encroachment of that. That's a B-level trade right there. On a graded response, you'll hear me say graded response. That's a beautiful entry for continuation. Then you don't want to see this or this get taken on the downside. Otherwise, we're coming back in the range. It hasn't. You're still going higher. You've got a slight little body above that, but I'm not impressed. I want to see a body get above this whole high here. And we're back into that premium box up here, right? We're also tapping this. This little low is taken. That low is taken. This is my SIBI. You trade above the SIBI, you come back into the SIBI. You trade above the SIBI, you come back into the SIBI. And what are we looking at? This bull trap right here. And if that bull trap holds, then we're back to bull and bear. And we talked about the bull and bear traps when it was coming down here. And we talked about it going up into this one. So you're back into those two traps. Ready to take your fingers. You're very welcome, Camille. Oh, we're back over here to the Bitcoin. Ooh, yeah. You're in this one, Russell, I can think. Can you look at LE again? LE, what's LE? Remember I said I want to see this low get taken? That's what I want to see. Look at that nice little pump up into here. Filled that fair value gap. Did not trade above it. I want to see it go below this. Take this low and then come back through that on a close. So far, so good. Oh, live cattle. Thank you. Live cattle was little piggies. Look at those little piggies. Looking good, man. There's that the next objective. The little piggies. Live cattle. There we go. So this was the change in direction that we talked about yesterday. So the body popped up above that level. We didn't want to see it get above it. It did. Gave you your entry right there for a long. Looking for the premium box. Went above the premium box, came all the way back down into CAM Model 1 consolidation. Rolled back through that premium box again, came back inside it, went higher, took out the highs, back inside this next premium box. That body's respecting it. Wicks did a little damage. Ran all the way through. Premiums. Hold highs. Busy. Now you'd have to march these things out. This is a 5-minute chart. Which chart do you want me to look on? You want 5 minute or go to something better? 15? Which level do you want me to look at? Come on. So what I would like to see now is no more than this. There's not much in here to play with, but that's it. I want to see this stay open. Just come back and tap that candle's high, or it's open, I should say. And that's it. The line in the sand is the mean threshold and the fill of this. Start getting through that. Ideal is tap and go, like institutional order flow, entry flow, keep going higher. It's also this level here. Finally traded through it, come back to it. Now you've got a body above this level here as well, and it's also the mean threshold of this candle. So you've got 1, 2, 3 levels overlapping an area of sensitivity. So I want to see that hold and start pushing for this upside objective here. That's what I'd be looking for there. So when it comes down into that level there, look for a 15-second chart to see a reversal, or a 1-minute chart to see a continuation to prove that entry. You never want to always, like Michael says, you don't want to predict lows. Don't always predict the low, so you wait for that area to get hit. And if you get confirmation on a 15-second chart that you're going higher, take that and use the 15-second chart, put your stop loss below here, and then monitor it. Once you got your entry, come back to your 15-minute chart and monitor it from there until it hits the level you want. Let's go, Craig. It's getting there, Russell. So when we get above that level right there, we see we're above the mean threshold. We closed above it. We came back in. We hit it, and then keep going higher. So the great little sensitive data point, and that's on Bitcoin and a 15-minute chart. It's fractal everywhere, everywhere. Looking for that guy. Gold. What's gold up to? Ooh, just shy of our objective. Now that's a ripper. Right back through us, changing direction. Literally closed right on it again. Open, tap it, ran. That's 3 examples of that open, tap, and go we've seen this morning. Closed right on the high of it. opened on it, tap and go. Take out all that liquidity above the market there. Right back up into this premium box here. Wait for something clean there. Come on down, oil. Let's go. Let's go. We'll get down there. And then you're looking for your change in direction once you get down here. Looking for that up there. There you go. Back down to that premium box again. Tap, tap multiple times. Ran the high. There's the body. Finally gets above that level right here. I want to see that come back down and tap these equal highs here now. And then you can see that keep marching higher. Fair value gap forms above. Come back, get an institutional order flow entry drill. Just give it a little tap, leave a portion open and go. We want to the fair value gap above price. There it is right there. I guess you could see it fill. No, it wouldn't fill. It would still be a little short of it. Just see it, tap it and go. Leave a chunk open. A plus is it just leaves right now. It doesn't even bother coming back there. Anyway, that's it for me, you guys. I've enjoyed myself. It's been a good run this morning. Hopefully you got to learn something. Go back. I recommend those of you who are new to this, go back through the video and you'll see lots of key levels explained with some very, very tight precision. There's that retap of the high. You might want to see that go higher. You don't want to see this get taken on the downside and start digging through the mean threshold of that candle. If you take this out on the downside, then you've got a market structure shift again through here. And you're back into this choppy consolidation. I want to see this go here now. That's perfect. Go, go, go. Anyway, that's it for me. I enjoyed it. Thank you. Hit the thumbs up, like button, subscribe, all that stuff if you're new. And we'll see you guys again tomorrow morning. Or I'll see you this afternoon if I see a nice setup this afternoon for a short. We'll get in on that because it's a Tuesday. It's a Tuesday, so we're looking for a Tuesday high. This would be a nice new high of the week and a run down. If not, this could be just a nice big continuation for the rest of the week, or at least until tomorrow. Thanks everyone for tuning in. As usual, much love to all of you. All the best. And I'll see you guys tomorrow. Oh yeah, where's my button? Over there. See you there.